Most people, when confronted with the choice of changing their thoughts or proving there is no need to change, get busy on the proof. Do you have a strategy in place? And how confident are you that that strategy is going to get you to the finish line regardless of what happens?
You should probably be a little more well-informed about the strategy you're going to employ that's going to impact your retirement, your kids' lives if you do this right, your grandkids' lives if you do this right, but people don't want to do it.
You owe it to yourself to explore that and to become well-versed on the living benefits and what we're doing with these policies when we put them in force and practice the infinite banking concept.
You don't need a qualified retirement plan to retire. You actually need a lot less money in net worth if you have a guaranteed, intelligent way to pull cash flow from it.
You need a system with guarantees and you need the cash flow.
There are no secrets. They're just things you haven't learned yet.
If you could speak to your future self the day before you die, what would they tell you? All right, what is going on? Welcome back, everybody, to Remnant Finance Podcast. We're going to be talking about stress testing your strategy today. Brian, how you doing?
Good, man. How are you?
Good. We are mid-August right now, and it's still sunny and 70 here in San Diego. Weather never really changes. But what's it like over there in Pittsburgh?
Man, I wish it was the same here. I wish it never changed. But it's actually about that today. It's like in the 70s. It's a beautiful day. For a change. It was like 57 degrees this morning, though. I was a little chilly when I stepped outside.
Yeah, the great thing about San Diego is the weather is always just about the same and always just about perfect. No humidity. But everyone else in the country would roll their eyes if you complain about that. But it does get kind of monotonous, and I personally love winter. And so, trying to do Thanksgiving in flip-flops and shorts, it's just it just doesn't feel right, So we're talking a lot about where we're going to end up next after this, and most likely we'll be up in New Hampshire in a year or two. And I'm very much looking forward to having the seasons there because, fall and winter is just that's my sweet spot. And it's always the same here, which again, can't complain about sunny and 70 with no humidity 300 days a year. But it's, the repetition gets a little monotonous.
And you have to live in California. Although the exact spot you're in, not so bad. San Diego area is not so bad, but you still have to deal with the rest of the state and the lunacy that goes on there. No thanks. It's the most beautiful place in the country that I would never even consider moving to.
Yeah, we wouldn't have either if it wasn't for the Navy. But the good thing about this area is there's so much military here that it's a little bit of sanity relative to California. And then this little island that we're on just off the coast of San Diego is a little more sanity than San Diego. And it's the zip code here. It's so wealthy overall that they just give the finger to Gavin Newsom. In the city of San Diego, they got sued because they were trying to clear out the Padres parking lot and bulldozed a bunch of, tents, and someone sued the city and said I had valuables in that trash bag, and the city couldn't prove they didn't, so they lost. And so you can't move anybody's stuff. So you might be living in a house downtown and you might have a homeless camp attached to your fence in the front yard and you can't do anything. But in Coronado, if someone makes it across the bridge, they get driven right back across and dropped off in the Padres parking lot or in that area. And the state of California hates it because you're supposed, their policies encourage homelessness is as simply as you can put it. It's just, it's absurd. But this little tiny town in particular, fortunately they incorporated as its own city rather than in a neighborhood in San Diego. And so they have an advantage over the other nice neighborhoods in San Diego that are dependent on the city. They have their own everything here. And so there is a degree of independence from the insanity. But that said, the price you pay to live here is not worth it long term. So we're enjoying this nice little island community for a little bit longer until we figure out where we plant roots. And like I said, probably New Hampshire, where my wife is from.
Man, I wonder what story are the people who set these policies telling themselves to allow that to happen?
Oh yeah, it's crazy. And the homeless problem here is so bad now that the city's losing revenue. Tourists, we had some friends coming to town recently, and they went downtown to walk around Gaslamp, kind of our famous little downtown district here, and said, "I'm not going back." It's just,
wow,
such a there's it's so bad, and people don't really understand. We're not quite as bad as Los Angeles. Los Angeles basically is just a huge homeless encampment, but we've got pockets here, and it really, it's just they're just a victim of their own retardation here. So I'm certain they have not, unless their strategy is the destruction of the local economy, then they are wildly failing at their strategy here.
Yeah, I mean, well,
But
it would it relates exactly to what we're doing here, and we're going to ask, like, why are people doing the things they're doing? And that includes the idiots that run your state, and holy crap, one of them might run this country, run it. I put that in air quotes, but we'll see what happens with her.
We've seen in the last month or two that they're just not being a president at all. Really isn't that big of a deal. Nothing much changes when the president is totally absent, incompetent.
I was thinking about that this morning. So he comes out and basically says that he's not fit to be the president for another term. Which, are we supposed to believe he's going to be fit to be president until January? And since then, I haven't even heard a single thing from our president. So who's making any executive decisions right now?
I guess the same people who were making it when they were pretending that
he was fit to be in office. Yeah, nobody's talking about it though. Like, everybody's just okay with it.
Yeah, that's it's really fascinating to watch this implosion right now. And it would be a whole nother episode of discussion on politics and voting and the direction, all that stuff, which is not what we're trying to talk about today. But it is particularly an interesting time to just watch as they raise up this self-destruction and this, the least popular candidate probably in the history of U.S. politics, who got blanked in her own home state last time she tried to run and was the first to drop out, is now they're pumping. She's kind of like the economy, where it's like there's nothing left. There's nothing under the hood, but they're just pouring money into it and hoping that people believe it. So
and it might work.
That's the crazy thing.
It might work. That's the crazy thing. I mean, if you
yeah. Well, one thing we know for certain is that no matter what happens in November, fiscal policy, monetary policy, they don't really change. The debt's not going down. The spending's not going to decrease. In fact, the debt has to continue to increase. Just the macroeconomic structure of our economy is such that the debt will continue to increase. And so when people talk about, cutting the deficit, that sounds great, but that can only happen if we abandon our current overarching monetary policy. And so it's just kind of an empty talking point that it's going to continue to increase. And we, as financial strategists, want to help our families and our clients deal with the fact that, no matter what happens, there's a few constants. That's that your money is going to reside somewhere, someone is going to be profiting off of it, and that the future is unknown. And so when we compare, and we talk about stress testing our strategy, when we compare the contractual certainty that we try to inject into your financial future with the typical model, which is based on a mountain of assumptions and is just that Jenga tower where any one block is going to topple the whole thing. When you think about the economic uncertainty that's that is clearly coming down the pipe as events seem to be accelerating towards who knows what, but certainly nothing good. We want to talk about stress testing our strategy. Why are you doing the things you're doing? And we generally open up a conversation with a prospective client. First of all, saying, do you even have a strategy? What are the goals that you're looking to achieve? And then what is the strategy to get there? And more often than not, do they have a codified strategy that they can point to and say, here's my action steps? Is that the norm?
That's what most people have, is they simply hope that they have a strategy to accumulate money, is what I've seen. And some people, and like we've talked about it over and over on all these episodes, but they hope that they can put money into this magical vehicle that's always going to grow. And then they hope that they have enough money to do something, and they don't know what that something is because they haven't even looked at, like, how long might I live?
Right.
What's my life going to be like? What's inflation going to be like? What are the fees and the taxes going to be like? What are my what are my needs going to be? Am I going to be healthy enough? Is it going to cost me more to live or less to live? Because we all draw this assumption that it's going to cost less to live. We don't draw that assumption, but they tell us that it's going to. And I always love what Todd Langford says is that why would you expect to spend less in retirement when every day is a Saturday?
Right.
It just doesn't make sense. But yeah, so people are not only stepping into this world of uncertainty, but they're planning with uncertainty. They're not even certain about their plan, is what I should say. And you know, for everybody, it's like your fears, doubts, and uncertainties about all these things happening. That's what stops you from stepping into your greatness and impacting the generations after you. And instead of living in that life of fear, doubt, and uncertainty, we want to inject certainty, guarantees, and hope into what's coming.
Yeah, and a thought that I just had as you were saying that about the idea of living on less down the road. You know, I have 30 more working years by the metric that of the standard retirement age. And if we go back 30 years, it's 1994. Back then, making six-figure $100,000 of income was a really good salary, right? And the typical advice, if we could go back and the way the advice is applied today, we go back 30 years, they'd say, all right, you're making $100,000, you're doing great. We're going to live on 70% of that is our assumption. And so fast forward 30 years, I'm at my retirement this year in 2024. If it's not adjusted for inflation, I'm living off $70,000 right now. And that is certainly not going to cut it. And then you think about where if you're using the 4% rule, what pot of money I need, how many millions of dollars I need in that pot of money to get $70,000 at the 4% rule. I am many, many multiples above the average retirement balance. That's not even adjusted for inflation. I don't think anyone foresaw in 1994 what inflation would be like when people were used to buying houses for $150,000 to say you're going to live off 70 grand in 30 years. Even adjusting for inflation, I'm certain they would be way, way shy of what you need. And so to fast forward 30 more years at the pace we're at, like that model, that the results are in, the models, it fails.
Yeah, I mean, and the inflation, it's going to impact your non-discretionary spending more than anything else, and it's just it's a giant tax on the middle class, which you know, like you were saying, 30 years ago, 100,000 might have been upper middle class, but they're getting hit with the exact same tax at a maximum place and if they haven't planned for that with some degree of certainty, then they're getting crushed right now. Not necessarily crushed, but they're not living the way that they were hoping they were going to live. And it's probably not working the way they thought it was going to work. So I think like you and I, we're not planning for decades out. I'm planning for generations out. And if we can get our clients and the people in America to start thinking multi-generationally, that's going to completely change the metric. And especially as we're talking about stress testing our strategy, if you've planned for your grandchildren's wealth, do you think you'll have some whenever you are at the stage of life where you want to take passive income, or maybe you want to slow down and stop working? I think so.
Yeah, absolutely. There's a quote by John Maynard Keynes, an economist who you might say his work kind of paved the path for what we're on right now. But as far as rethinking your thinking goes, his quote was, most people, when confronted with the choice of changing their thoughts or proving there is no need to change, get busy on the proof. And so that gets back to a lot of the challenges we hear about IBC is we will present this alternate way of thinking, which goes directly in the face of what we've been trained and marketed to when it comes to retirement planning, financial strategy, et cetera. And rather than saying, interesting, let me learn about the living benefits of whole life insurance, it's let me start proving why that can't work without being able to speak fluently to the product that we're talking about. And so we want you to, when confronted with this choice of changing your thoughts, give it serious consideration rather than starting on the proof that the way you currently think is the right way. And we both came to this by doing that, initially being skeptical, challenging it. And, the amount of hours that I spent asking you questions and trying to disprove this goes to speak to that. It took me a long time trying to get busy on the proof, as Keen said, to prove there's no need to change. And eventually I realized, well, I should just have saved myself this time and open my mind to the idea that I need to at least be fluent in the product I'm talking about before I try to disprove it. But that's what we want, is we want you to look, do you have a strategy in place, and how confident are you that that strategy is going to get you to the finish line regardless of what happens? And that's part of what we try to provide clients, not just setting up an IBC style policy, but we want to take a holistic look, go over your entire, put all the pieces on the chessboard like we talked about in our Stockholm Syndrome episode. You're playing against an opponent or three opponents. Let's get everything on the board and see where we're actually at, instead of just outsourcing that and hoping that someone else's projections and assumptions are going to come true.
Yeah, I was thinking about there is at the end asset that we were at, Garrett Gunderson was talking. Yeah, he always has really brilliant things to say, it seems. But he was talking a bit about people's money story there, and that most people's money story comes from a place of victimhood, and if you think about people who stand in a place of victimhood, which all of us probably have in some way or some degree, right? I mean, you talk in your little bio episode about the victimhood Olympics,
Yeah.
or the oppression Olympics rather.
Yep. The oppression Olympics.
Yeah, same idea at Harvard, but so people have a money story, and it comes from a place of victimhood, and it's because they don't recognize their own value as a person. And if you don't recognize your own value and you're standing in your own victimhood, you will 100% get busy on the proof of why you don't need to change. Because if you think about it, somebody who plays the victim card, they never want to change. They always want to blame. And so that like entitlement mentality and that blame game becomes their currency. And so exactly what like Kane's is saying here, they're going to get busy on the proof that they don't need to change, because they can point the finger at every other reason why they're in the state they're in. And it's the same with money. It's the same with money for all of us. It's the same with everything you do. It's the same, when we talk about the 5 F's, it's the same with fitness. It's the same with the position of your family and your relationship with them. And if you think about a lot of people that have a poor relationship with their family, they'll blame their dads because they stand in a place of victimhood, or they blame somebody else, right, on why their relationships are all falling apart. It's obviously we're talking about finances here, even faith. A lot of people, because bad things that happen in their life, they blame God, and they stand in a position of victimhood, and they're afraid to rethink their thinking on that. Friendships, community, all that stuff. So it's absolutely true. Like it's pretty wild when you think about what he's saying there. It applies to every pillar of your life. And
yeah, absolutely. And it's humbling to admit that you've been duped, for all of us, right? Especially when it's something that you are passionate about, that you have well researched to a degree. For me, for instance, coming from the mindset of that conventional financial planning, being a vocal advocate of that, it's humbling to
an idiot.
Reconsider. Yeah. But if it's something like crypto, for instance, I have a surface level understanding. I dabble a little bit, but I'm not like invested in it to the point that if I find information that counters where I currently stand on it, it's not going to shatter my identity. But if you are a hardcore crypto guy and find out that the whole thing was a scam, or if you are a hardcore crypto skeptic like Peter Schiff or something, and you find out that actually is going to be the future of money, when you're invested in an idea so heavily, to have to like peel that off and rethink that can be humbling, but that's what we should all do. And so for almost everyone, we're all ingrained with the same financial planning paradigm. And so maybe we've been duped. We saw that we were duped by the medical system as a society. And so it's the same people doing it. So let's just be open to reconsidering.
I was gonna say, I think someday in the future we should probably have a crypto expert on, because I don't have a deep understanding on it. Every once in a while, I'll drop a little 20 twin on some crypto and watch my point. It gives me 0.0001 coins or something like that every time I drop a 20. So I have a little bit. I'm just like, it's exactly what you're saying. I gamble on it because I don't understand it enough, but that'd be a cool thing to learn a little bit more about.
I bought a bunch of XRP when they dropped a lawsuit and thought like, this seems fishy, and that's just getting resolved now. That was a couple of years ago. I took a pretty big position in that. And that's, if the lawsuit is when it's finally wrapped up, and like, but again, everyone's perspective on that is always in terms of dollars. It's never about the utility of it, at least for most people. Anyways, that's way off topic. I want to bring it back to talking about retirement planning, stress testing your strategy. A quote from Doug Fry, who is in a mastermind group that we're in. He's a financial strategist out of North Carolina. And I'm not going to quote this exactly because I wrote it down as he said it. But the concept that the point was that most people spend more time on planning a 1-week vacation than they do planning their retirement. And then he made the point that 30 years of retirement is 1,560 weeks. Yet people will spend more time planning a vacation. And that, we've mentioned it before, we always ask someone who's learning this and doing a deep dive, we're very glad you're going through this process, becoming well-informed. We want you to be able to speak fluently on the product. But just out of curiosity, how long did you spend on your decision to invest in your 401k or your decision to purchase this mutual fund or whatever it was? And invariably, what is the answer?
Sometimes it's none. And sometimes it's just, I picked the places where I allocate where my money goes within the 401k. And it's just like, what made you pick that? I don't know.
Right.
So they spend a absolute minimum amount of time, but everybody told them to put their money in a 401k so they don't question it. And I think that you should probably be a little more well-informed about the strategy you're going to employ that's going to impact your retirement, your kids' lives if you do this right, your grandkids' lives if you do this right, but people don't want to do it.
Yeah. Yeah, and we can talk through that too. If you have your strategy in place and you feel comfortable about it, we can look for exposure. We can look for any unnecessary risk you're taking. There's a lot more than just the whole life policy that we use as the foundation for long-term generational thinking. But it's always worth getting an extra set of eyes, as Brandon Goswick says, being inside the jar of jelly and sit on the outside. If you're able to be on the outside and look at the label, there's value in that. And that's something that is uncomfortable to do sometimes, is to get an outside opinion, but very necessary. And getting back to the fact that Tiger Woods has a golf coach, that says everything you need to know about the fact that you should have outside perspective on your situation.
Yeah, it's funny when we talk about infinite banking concept and the idea that what we do here is that we're trying to solve for the fact that you finance everything you buy. And so you either pay interest to somebody else or you give up the interest you could have earned, which I'll try to repeat over and over and over. One of the biggest things we do here is we borrow against our policies. So we go to the whole life insurance company that we took our policy through. We borrow money from them. They're going to leverage our policy and make a loan to us that we can then use for whatever it is we want. And one of the questions we'll sometimes ask people is, can you access the money in your 401k? And if they know about the fact that they can borrow from it, they typically don't know anything more than that they can. They don't, sometimes they'll say, well, I can borrow from my 401k and I pay myself the interest. And so you can ask some further questions. I want to chat about this real quick. What happens if you borrow and the market goes up or the market changes, the market goes down? How does that impact the future trajectory of that 401k that they drew this beautiful, curve for you on? How long can it be borrowed? What if you lose your job? So you're talking people haven't even planned anything out and they say, well, I do have access to this money, but they have no plan as to how it would work if they had to access it.
Yeah.
And we solve that strategy when we stress test this using the infinite banking concept. We understand those things. We teach those things. You learn those things. They're innate and they're contractual.
Yep. And on the idea of you finance everything you buy, just a quick plug, our blog is now up and running, remnantfinance.com/blog. We have an article on there called You Finance Everything You Buy, and kind of walk through that idea a little bit. There's another great quote from our friend, again, Brandon Goswick. He was given an example in their podcast, Cash Flow Legends. And he said, if you're at the gym, you're putting in this work, but you don't see the results until you see the results down the road. But if someone could hand you a picture and say, if you continue on this strategy in 10 years, here's what you would look like. And the way that you know you would look by doing this strategy, whether it's the diet, the exercise, and you're trim and you've lost weight and you look how you want to look, if you knew that that was the result with certainty, how hard would it be to motivate yourself to go to the gym? You would be very motivated to continue down that path because you know with certainty what the results are. We talk about the economic value of certainty. You can't put a quantifiable number on what that brings to your financial picture, but when you have that certainty, it removes question marks in other parts of your financial strategy overall.
Yeah, and the key there, just like when thinking about what he said there, is if you knew how you would look going to the gym in 20 years, would you continue the plan? And the plan really is just some discipline. And so if you practice a certain discipline, which with this is paying premium. Mm-hmm. So in whole life insurance, if you practice paying your premium, you actually do it the way you're supposed to do it, and you practice the process of this, you are guaranteed a certain outcome, but you need to be patient with that outcome. So urgency on the discipline and patience on the outcome. And you will know the future of what that outcome is going to be at a guaranteed level, and potentially and almost guaranteed to be better than that. Yeah. And I think that's where the stress test comes in, is I have no idea on any other strategy what's going to happen.
Yep. It's all, and again, when people hear the words whole life, they have the reaction that we all initially have without knowing the living benefits. People don't know the living benefits. Like, if you are coming to this podcast with no understanding of what whole life insurance is beyond what you've heard from angry talking heads on the radio, and we say that whole life can tell the future, if you don't understand what we're saying when we say that, you owe it to yourself to explore that and to become well versed on the living benefits and what we're doing with these policies when we put them in force, and practice the infinite banking concept.
Yeah, the outcome will likely be better than you deserve.
Yeah. Yeah. That's awesome.
So another little blurb here is that there are no secrets. They're just things you haven't learned yet. By Keith Cunningham from A Road Less Stupid. And it absolutely applies here, because everything about this product and this process is out there. Everything is there to be learned. And the fact that, do you have blinders on or not? Are you going to let your biases drive you away from something you don't understand? Are you willing to rethink your thinking? Because it's all here. The path to have a good strategy that has been stress tested, to go back to that, the strategy that you can use to implement guarantees, efficiency, certainty, and all those things into your life, your family's life, and your children's lives, is all there. You just got to be willing to. You just got to be open to hearing it, to learning it.
Yeah, and whole life is the oldest financial product that we have access to. It's got a very, very long track record, and again, there's no secrets to it. Like, you might not know what the living benefits are. You might not know what you can do with it. You might not understand the power of it, but none of that's a secret. It's literally in the contract, and you can read the contract that you'd be putting in force.
What if the insurance company fails?
Then you have, so you just want to go through like the
No, I'm just saying, like, but there's still risk, right?
Yeah. So if the insurance company were to fail, fortunately, they're not a bank, and so that they're 100% capitalized to their current liabilities. But then they also are required to carry reinsurance to the tune of 100%, such that if they were to not be able to meet their obligations, if in this case, increased death benefits were to come in beyond their conservative estimate, they are 100% reinsured by another carrier. And then beyond that, they pay into the State Guarantee Association in every state that they sell insurance into. And so that's the second backstop to where the state would make you whole, or the State Guarantee Association would make you whole if the insurer, who's 100% capitalized, and the reinsurer, who's 100% capitalized, were to fail. And so that is why there's never been a default on a whole life policy in the United States.
What about elsewhere? Most of the other conventional strategies, are there risks?
They're only risks. You assume all of them.
They are only risks.
There's nobody to call when your 401k goes down. If you take a 2022 or 1973 or 2008 or 1999, when you log in to your brokerage and see the balance, whether that's in a retirement account or just a taxable account, you can't just call up your broker. I mean, you could remove yourself or change it around your allocation, but those results are in, and you, by signing up for it, you agree to maintain all of the risk on that investment. So it's only risk in that sense. And the risks, they're there and they don't cease to exist because you ignore them. Facts don't cease to exist because you ignore them. I might not understand the ins and outs of a whole life policy, but that doesn't mean they don't exist. I might not understand that in my 401k, I agreed to assume all of the risk, but just because I don't know that doesn't mean that the facts aren't there, that the risk isn't there. Those things exist whether you acknowledge them or not, and that's the painful part. And getting back to, it is humbling when you might have signed up for something without full understanding of it.
So you mean whether I just bury my head or not, myocarditis did in fact increase exponentially following right around late 2000 through 2001 and 2002?
At 21.
Well, the initial shot came out at late 2020, didn't it?
Yeah, you said 2001 to 2000.
Oh, 2020, 21, 22.
Yeah.
Yeah, right.
Right. You could just boost away, but you pretend that the risk isn't there. It doesn't remove the risk. The risk just exists. The facts, they exist, and you can choose to explore them or not.
You know, I actually was listening to an old episode of the Cash Flow Legends that you mentioned earlier, their podcast, and they had a guest, Matt Love, and he had a few really good comments that I jotted down, and it really, I think, ties well into this. And it's just like, you know, you don't need to be invested in the market. It's not the only thing you can possibly do with your money, and neither is infinite banking, and neither is whole life. People do real estate, people do lending, people do oil and gas deals. People do all kinds of things with their money and things that we don't even know or never heard of. You don't need to be invested in the market. He said, here's another crazy fact that people can't wrap their minds around and need to rethink a little bit is stocks aren't the only place to earn a rate of return.
Yeah.
A rate of return is mathematics. It's not oriented in a particular vehicle a particular place you put your money to get a rate of return. It's just math. If I lend you $10,000 at 15%, I've got a rate of return without investing in any other place except you and what you're going to do with that loan. Banks get a massive rate of return, and they don't have their money in stocks. I mean, they might have some sort of portfolio somewhere. I've never dug that deep, but the place they earn their rate of return is not from what the stock market does. It's from the way they flow money, and it's from the business of banking. He said a couple really good things. I wrote all these down. You don't need a qualified retirement plan to retire. You need income. You need cash flow. You need to figure out and plan and stress test your plan in such a way that you can guarantee that you're going to have income when you stop producing income. You're going to have income coming from somewhere else when you stop producing from, a job if you're going to retire, or from a career or from a business that you're involved in. You don't need to have a 401k for that to happen. You just need to have a way for it to happen. And I thought all those statements were so simple yet so profound, because we are so conditioned to think that that's the way and that's the only way. I've got to have stocks. I've got to have a 401k. I can't retire without this plan. Retirement plan, right? That's what it's called. Right. When you go get a job and your HR person says, what do you want to put in your retirement plan?
Right. The results are in. The average 401k balances are being published by age, by demographic. The results are in, and it's not working for many, many people. So not only do you not need to have a qualified plan to retire, but statistically, if you look at the median balance, at least 50%, and probably much more, because for the retiree age bracket, I think it was 245,000, something like that, which is not even close to enough. So you could probably move pretty far past the median and comfortably say that 70% of people that do have a retirement plan aren't going to be able to retire, at least off of that account.
And I hate that. I feel like we often go back to this on our podcast and start railing on 401ks and qualified plans. And I don't even want to do that, because truthfully, there are people that are going to retire with multi-millions in their 401k, but they did it different. They completely maxed it out, and they found ways they didn't save 5 and 6% of their money, or not even save. They didn't speculate with 5 or 6% of their money into their 401k. They maxed it out every dollar they could. They had companies that would max out more. Some of them were self-employed, so they were able to max out to the top dollar every year. They went above and beyond and did it different than the general public. So the 401k and the product isn't necessarily the problem. It's the strategy and or the lack of strategy that is the problem. So I don't always rail on it, because maybe it might work for you. Like we always talk about, we both were in the aviation industry. So just because of that being, military, we know a lot of people who made it to the airlines. And the airlines have one of the most phenomenal 401k non-contributory plans in the country for an employee. Those people will accumulate a lot of money in their 401k and potentially be able to retire on it. But it's done differently than most people.
Right.
And what people realize, they're not thinking that I actually have to have a strategy and a plan of how this is going to work, even if it doesn't work.
Yep. And you could substitute. Yeah, we do kind of rail on that product specifically, but it's more of that's more kind of symbolic of the overall message that you hear in the planning space, which is just qualified plan, grow. And we get back to the order of operations that we talk about: protect, save, grow. You can't you should not be doing growing before you have protection in place and savings in place, because you'll wipe out those growth assets if the previous steps aren't in place. And so that order of operations is super important. So when we are criticizing a specific product, it's not that product doesn't have a place in many, many people's overall strategy. It's criticizing the idea that that's the first place that their money should go. And that's the primary goal. And if you look at most, here's the step-by-step to become a millionaire, it's almost always starts with, have an emergency fund, and then max out your 401k, max out your IRA. Like, those are the very first steps. And those should be the last steps once the other steps that could topple the whole plan are in place. And so, yes, we mentioned 401k a lot. It's kind of like the whipping boy for the grow ideology. And we're not challenging the 401k, its own specific merits, which it certainly has merits, but we're challenging that is the ultimate and really the only place where you should be focusing, and focusing your effort and starting your order of operations. That should be after protection and savings are in place.
Yeah, and I also think that just the accumulation method is a failed idea, because it doesn't plan for the way it's going to be utilized, like we talked about at the beginning of this episode. And just as a little thought project, if you have, to use simple numbers, $1 million that you've accumulated, and that used to be like this massive metric that I think people still have in their brains because of that prior conditioning, people my age, but when we heard that, in the late 80s and 90s, or especially in the 90s, when you start thinking and hearing about money when I was a teenager, it's like $1 million is like this huge metric that you're going to be able to just retire on if you won the lottery and you would never have to work again. And it's like, now it's not nearly enough for almost anybody, even for a middle class standard of living.
That's
so
for $40,000 of income on the 4%
they talk about the
rule,
4% rule. That's what I was going to say. That's $40,000 of income. Well, check this out. If I find a way that I can earn 10% cash flow on my investment, how much money do I need to get 40,000? 400,000. So if I have $400,000 working in a place that will pay me 10%, and it can pay me 10% perpetually, those places exist. I'm not going to suggest them. I think that's a place for another podcast. But if you can find a way to earn 10% on your money, you only need $400,000 accumulated. And I'm just trying to show that cash flow on money working for you is a lot different than draining down an accumulated pile of money and trying to do it safely, because that money is still at risk. And that's the reason the 4% rule exists, because that money is going to stay at risk. And that 4% is supposed to mitigate the down years. Supposed to. It depends on how the down years work. So there's still a whole bunch of unknown variables. And it's just start thinking differently. How can I turn this into cash flow? How can I plan for that? And what's that look like? You actually need a lot less money in net worth if you have a guaranteed intelligent way to pull cash flow from it.
Yeah, and there was a fantastic, I guess, rant is what I would call it, but there's an economist in our space who's very prominent in the IBC world, Ryan Griggs, and he was talking about one of the pinnacles of this conventional financial planning model, and I took a few notes and jotted that down, and it was just the idea that, is X enough to retire? You go in, you sit down with your CFP, you figure out your number, which again, going back to the example of starting in 1994, if we had come up with that number, we know it wouldn't have worked today if we retired this year. But you set this number as X enough to retire, and just the fact that the way that our economy is structured in this fractional reserve banking system, that number doesn't mean anything. And he said, when it's very reasonable to suspect that in 30 years, the cost of a car might be what we pay for a home today, setting this number, this arbitrary down the road goal, and just building towards that as the primary foundation of your strategy, that's not a strategy. Like you need a system with guarantees, and you need the cash flow now and in the future, not just the stagnant net worth number that you're striving for, because our macroeconomic environment is going to leave you miles and miles behind if you don't account for all of these factors that we try to stress test against.
Yeah. And so to kind of sum up, I think that current you needs to have a good conversation with future you and think about how future you wants to live and how future you wants to see those, let's call them golden years out. And on my end, more importantly, what is future you going to leave for your family? What kind of legacy is your family going to have because of what you've done, and not just financially, but in every realm. And yeah, so as far as on the financial side, though, I only know of one asset that can provide certainty, and when coupled with any other strategy, will always make it better. And that's whole life insurance, whether that's coupled with your 401k, real estate, you name it.
And Brian, let's just say theoretically, you got a diagnosis. This is your last calendar year on this planet. December 31st, it's lights out for you. How much insurance do you want in your financial plan?
Every dollar they will write.
Yes, of course. Of course, because that's guaranteed to be there and will be left behind and will return multiples of what you put into it. If you're going to die tomorrow, if you know when you're going to die, but you can somehow still get insurance, if that scenario existed, you would want as much as you possibly can. So
absolutely,
you are going to die one day in the future. If you had asked, if you asked on your last day on Earth, and you said, "Hey, how much? If you can still get insurance, how much would you take?" It'd be the same answer. So we know that day is coming. We know for certain that there will be our last full day on Earth.
Isn't that what murderers do? like they take out large insurance policies on their spouses, but when they know they're going to kill them.
Yeah. Yeah.
I mean, even with a murderous ideology, it makes sense.
Yeah.
Don't murder. I'm not suggesting you should murder your spouse, but like people that actually know someone's life is going to end because they're on a murderous rampage, it happens, and people get arrested and go to prison for it. They take out large life insurance, as much as they can get on that person, and then 6 months later they kill them. It's like, because they know that eventual outcome is coming and they think they're going to get away with it. Like, if you knew that outcome was coming, it's coming, you're going to die. Like, why wouldn't you want every dollar of insurance you could have for your family?
Yeah. And today, Brian needs to talk to future Brian. There is a future Brian where it is his last day on Earth. And what would future Brian, who knows he's going to die tomorrow, tell you right now? Leave everything you possibly can behind, because what are we doing all this for? We're doing this for our family, for our children. What is your financial strategy for? It's not just to sit on a beach and golf. Like, it's for your family and your children. And so if you could speak to your future self the day before you die, what would they tell you? And it's, what you would tell yourself in that situation, but we just don't think like that. We're not long-term oriented, and we want to train ourselves to become that way.
Yeah. You mean, you wouldn't tell yourself, like, screw them, I'm going to spend every penny, let them figure it out just the way I did.
Yeah. Well, one more cruise, they can pick themselves up by their bootstraps.
Pick them up by the bootstraps. You got it. I'm not leaving
No.
them anything. I'm just going to leave them debt. And then, you know, when I die, there'll hopefully be enough cash under the mattress to bury me.
Yeah, it's a good callback to a previous episode.
All right, brother. I think we beat this one to death.
Yeah, stress test your strategy.
Stress test your strategy. Do you have guarantees? Do you want guarantees? I do.
Yep, most definitely.
All right, man.
Alrighty, we'll see you next time. Cheers.